the Jet Setting Wealth Advisory Podcast, where your financial journey takes flight with David T.U. As an airline pilot and financial expert, David merges the aviation industry and wealth management to help you navigate today's complex financial skies. Each episode features expert insight, blending personal stories with essential financial strategies. We ask that you fasten your seatbelts and sit back as we prepare for takeoff. Our destination, your financial empowerment.
Hello, everybody. Welcome to another episode of Jet Setting Wealth Advisory, where we spotlight financial leaders and innovators helping clients reach new altitudes in wealth and life. I'm David Yu, active airline pilot, financial advisor, wealth advisor, and host of the show. Each week, we explore strategies to help professionals like you chart a clear course towards financial freedom and long-term success. Today, we're joined by Mr. Matt Green, a Greenville, South Carolina native whose path to becoming a respected accountant and enrolled agent and a business advisor is anything but ordinary. Before launching his firm, Matt spent more than a decade pursuing his passion for music, playing drums in a hard rock band, recording a solo album, and immersing himself in Nashville's creative scene. After returning home, Matt shifted gears and found a new calling, helping entrepreneurs and small business owners take control of their finances. Armed with both a bachelor in accounting and an MBA from Liberty University, earning summa cum laude, he founded Ledger Medial Accounting Services in 2020. Today, Matt and his team support business with tax strategy, bookkeeping, and high-level advisory services, all delivered with his signature blend of clarity, practicality, and creativity. He's also an IRS enrolled agent and QuickBooks Pro advisor, known for making complex topics simple and even enjoyable. Get ready for a thoughtful and inspiring conversation about business growth, financial clarity, and the unique journey that led Matt to where he is today. So, first of all, welcome, Matt. That was a long-winded introduction to yourself.
Yeah, thank you for all that. I don't know if I wrote all that. I appreciate it. It's good to be here.
Yeah, we're very happy you're here. So let's get started. You lived two very different lives, first as a musician and now as an accountant and advisor. What inspired this entire transaction? Tell us your story.
Well, you hit on it, you kind of gave the overview, but I'll try to keep it as quick as possible. But I knew exactly what I wanted to do, and that was music. And me and a guy, we were passionate about it, formed a band. We were playing gigs, pretty big gigs. I say as early as like age 20.
Okay.
And I looked so young. Like now I'm actually 71. I just look really good. But when I was 20, I looked really young.
Okay.
But I'm kidding. But actually wound up getting kicked out of a couple bars after we played a few times. Anyway, we did that for a few years. We had success many ways other than monetarily.
Mm-hmm.
I just saw that not working out. So I went to school 2003 when I was 25. Moved to Nashville, went to school for audio engineering. That's where I met my wife. She had two little kids at the time. They're not little now. They're getting close to 30, but then they were 5 and 7. Then we had our own daughter in 2008.
Gotcha.
The quick version is I moved to Nashville in 2003 with 0 kids, moved back in 2009 with 3 kids. So I figured I'd better do something. So music was the most unstructured career path and went all in. I'd say altogether I took 56 college classes for my MBA and bachelor and everything.
Got it.
Painful, but I did it.
How did the skills and creativity from your music career carry over into your work as an accountant and business owner?
I think it helps. I think outside of the box.
Yes.
A lot of accountants that I know, they're really like by the time they're 19 or 20, they're taking their college accounting courses. They're already kind of an accounting brain. And then they just go become an accountant. And then they're like, hey, I can do it myself. And that's kind of an afterthought. And generally they buy a practice or they buy some clients. And that seems to linger on from decades, really. I mean, the firm I was at, they were really remnants of a firm that had been, realigned and bought, and this part and bought this since probably literally the late 70s, early 80s. So, I mean, I don't think that way at all. The way I see it is we're virtual. So all 50 states, we even have a client in the Virgin Islands. I see it as that's all my client base. I don't think, well, I got to have an office here so I can get clients here, or or whatever else. And it's a totally different mindset than probably really almost every other accountant I know. Maybe 1 out of 10 don't think I agree with. I don't really I don't really follow a blueprint, I would say. Obviously, the accounting does, but the way I operate and the term how I grew my business or even discussions with clients, I just
Okay.
think about how it feels to me and how it really is rather than how it was.
Okay. All right. Very good. So Ledger Medial has a creative conversational approach to finance. What inspired you to take that tone in an industry that's usually pretty serious?
I think most people don't like talking about tax and accounting. I give a good bit of talks on different things. I've been on a few podcasts, and generally I notice when it's about tax or accounting, they're just zoned out or on their phone or something. But people really just want to talk about their business. And I think when you give them the numbers and you can explain it to them in a simple way, I think they want to be creative. Obviously people, I get that a lot. I want an accountant that's creative. I don't want to do anything messed up and unethical or
Mhm.
is illegal. But we can be aggressive. A lot of times people just want to talk to someone about their business and having good financial information there. That their wife or their husband gets tired of hearing about it. So it gives you a chance to kind of be an outside ear. And then
Mhm.
when you've got good financial information, then you can start thinking outside of the box. So what makes sense? What's really working? How can you move toward this or that and what you really want to do?
Okay. All right. Tell us about your enrolled agent practice. How did you start it and what kind of clients do you typically serve?
So we serve any business owner that wants to grow. We like to work with. Generally, the best bet is an all-inclusive type of monthly bookkeeping, financial statements every month, and
Mhm.
go ahead and schedule in quarterly meetings to go over those numbers. And then there's the tax planning portion where we look at their tax liability all year long and do projections, quarterly estimates, and then normally the tax return itself is included in the monthly fee because
Mhm.
that's our ideal client. And the quick answer is we don't mess with the gas stations or used car dealerships for the most part, but any other type of business, if they're willing to listen and they're willing to simplify their accounting, which is really for some reason it's hard for some people. I don't know why, but that's really the first step. But those are the people we can really help. But we also are because we're virtual and we're very lean, we
Mhm.
have a very cost effective pricing model for individuals that want to file their taxes. I always say that if you've
Okay.
got a W-2, stick it in TurboTax or whatever, be done with it. If you've got partners in 8 different countries, we're probably not a good fit for that. But in between, if they've got a rental property or 50 rental properties, they got an S corp or partnership, some K1s flowing in, or they've got a side gig or anything in that realm, we're usually a good fit for that.
Okay. Very good. Thank you. Your firm's messaging emphasizes simplicity and collaboration. What does that look like day to day when working with the clients that you serve?
We are very responsive. I'd say it starts with if you email me, you're not going to get ghosted. It may take me a day or so to respond, but I'm always going to respond. But
Okay.
generally, when someone's in a monthly situation, this is understood that we're all inclusive and we're going to respond and answer all of your questions. Scope creep, we're not working for free. Generally, you can ask us anything and we're going to respond with an answer. If you need to set up a Zoom call, obviously we use automation to set up calls and Zoom calls. People that have my email can easily set up a call with me or we can set up a time. But generally, we're touching their books at least once a month, which there's some correspondence there always to get that streamlined. So there's always some constant communication, and we usually do 3 quarterly projections. We're there.
Well, at least once a month, and that's a lot of touching.
Yes.
So, Ledger Medial's mission is about empowering people to make the most of every dollar. How do you help clients shift from reactive to proactive when it comes to managing their money?
Well, obviously, you can't. Back to the Future is a movie. You can't really go back in time and change anything. So you're always thinking about that in advance, but really having good books. And it all starts with this is like the simplest thing ever. And the reason I have low tolerance for this is I can show you when I released an album in 2008. I
Okay.
knew nothing. This was 4 years before I even thought about being an accountant. And I set up a separate bank account for my album and business and any revenue or expenses I had. I knew that when I knew nothing. So So like it really starts with simplifying, and I'm getting to the point here, but you just have to use business accounts for business transactions and don't commingle. Once you do that,
Sure.
it doesn't matter if you hire a CPA, CFO, CMA, enrolled agent, tax strategist, controller, bookkeeper, whatever you want to call that person. They can do nothing if they're just cleaning up a mess and trying to put together a jigsaw puzzle. So I'm saying this specifically for business owners, but if they have books that are accurate and you're factoring in depreciation, you can project what your income is going to be. And when they're over time, then you can see seasonality, you can see the rate you're growing, and you can project your tax liability. And is it time to set up a retirement account for you and your employees? Is your entity structure what it should be? Really, those are two of the ways you're going to save taxes. The third is really timing purchasing of major assets. Obviously, you don't want to buy something just for the sake of saving taxes, but it's going to help grow your business. So there's a lot of ways to save taxes, but generally they have to be done as you go. And it all starts with having clean numbers to work with.
So let's talk about that. Clean numbers, clearing up industry misconceptions. You mentioned one big misconception that business owners should have a separate provider for bookkeeping and tax services. Why do you think that's a mistake? Or why do you think people do that? And why do you think that's a mistake?
Well, I think people do that is mainly because that's the selling point. Most people that just do bookkeeping, that's what they're doing. They're advertising to say have clean books for your taxes. And that's true, but I think they're not tax basis in that. What I'd say is like an example would be I had a client, he's like, hey, my net income is this. He paid us to do a tax rejection. And what he was doing, he built a commercial building for his cabinet maker. And he sunk a lot of money in there. I mean, it wasn't, when you think of a building, it was a small ware. It was like $90,000, $100,000. So in his mind, he's thinking I spent $90,000. I've netted 150, so I'm only paying taxes on $60,000. It does not work that way, as you probably know. Whenever that building is complete, then it starts depreciating over evenly by the month over 39 years. So it just doesn't work that way. So I think when you have a person doing your book separately and is going to do your taxes, they may not understand all that. Maybe they do. And then also like cash in, cash out. If you're making loan payments, a lot of those loan payments are very principal heavy, are very interest heavy in the beginning. So either way, the interest is the only part that's going to hit your profit and loss and the amount you're actually going to pay taxes on. So they're thinking, hey, I'm making this $2,000 a month loan payment. So that's $2,000 I'm not paying taxes on, but it could be $100 in interest. So I think knowing that throughout the year is really important. Those are just two examples, but depreciation rules are always changing and what you can and cannot do. So really you have no idea what, and the business owners, they're going to look at the profit and loss and they're like, oh, I've made $20,000. I'm not going to owe any taxes. And then if the books are not up to date, then they're paying someone else to fix it. And we're not going to do a year's worth of bookkeeping in February and March. It's just not going to happen.
Right.
So those are all the reasons. And just because we're not Ledger Medial bookkeeping, we do bookkeeping and charge basically what everyone else does. I mean, it's not. But it's their selling point. And not saying all bookkeepers are bad. We have several we work with. We've even had at times and still have one where we do tax planning while someone else that doesn't work for us does the books, and that's worked out fairly well at times.
Okay. You'll have to speak up a little bit at the end here. Yes.
Sorry about that.
So what are the advantages of having one firm handle both sides of the equation, the bookkeeping as well as the tax strategy, under one roof?
Well, I think even for billing, as far as the accountant's fee, I think it's going to be more cost effective because you're paying one monthly fee. Like I said, we try to put everything in one monthly fee if we can for our business. They're not getting hit with a separate bill for tax prep. They're not getting hit with a separate bill for tax planning. It's just all one inclusive fee. Okay. So it's kind of hard to really say you help a business grow when you'd hit them with a $5,000 tax bill in March or April that they weren't expecting. So I think having it under one roof, then you know what you're going to pay. And I think On the flip side of that, it's important to understand your engagement with your accountant. Having it under one roof, you're getting everything in one inclusive feed generally. That's how we operate. Others do as well.
Okay.
And it's just you're constantly seeing the tax basis financial statements that are showing you what you're actually going to pay taxes on. And then like we'll give them tax projections 3 times a year and change as needed. So they're never getting hit with a surprise tax liability either.
You've talked about the overuse of the term CFO, Chief Financial Officer, in the outsourcing space. What do you mean by that, and how can business owners tell when they're truly getting CFO level guidance versus basic financial support?
Yeah, I actually have a lot of CFOs that, fractional CFOs that used to be really actual CFOs, and I meet with them fairly regularly to pick their brain. I think even if they do provide what a CFO would provide, translating that to a normal person is nearly impossible. And then it's what do you actually need? I think it starts with a business owner asking, what do they actually need? When I think of a CFO, I think of someone that's actually been a CFO. Like they've worked at a company that's multi-million-dollar company. They've worked with the CEO or any other leader in the company to make business decisions for a large company. They understand how a large company operates. I think when people hear CFO, they're really thinking cash forecasting, or they're thinking KPIs, key performance indicators. And that's really with automation and all that. If I have a year's worth of accurate financial statements, balance sheet and profit and loss, I can stick it in ChatGPT. I can check it for accuracy and I can ask it questions. I can get it to give me KPIs. I can get it to tell me how healthy it is. And then I can say, well, can you say it this way? And we don't do that per se, but like, that's not really being a CFO. A CFO is really for financing and going public. Like you may need someone. What you need first is really a controller, which a controller is just making sure all your accounting information is accurate. They're basically the person overseeing your accounting, which at $2 million to $5 million, maybe it doesn't make sense to hire somebody in-house. So you outsource that. And then the CFO really, you may need what they do for 5 hours over the next 2 or 3 years, really, or maybe you don't need them at all. What you really need is someone just to give you good financial information and help you talk through these and use them. What if scenarios, if we hire this person, if we sink this into marketing, we expect this to come out, what's our cash going to look like? Should we buy a vehicle now? And a lot of CFOs, they don't have tax. So I think that it's just the misconstruing in the mind of the common business, small and medium sized business owner and what they need, because the CFO is not going to help you with tax. So I think what they really want is to not get hit with unexpected finances, save taxes, and grow cash, grow their business. So that may or may not be an actual CFO.
Okay, very good. So how does your firm approach advisory work differently from those overused fractional CFO models?
We keep it simple. At this point, we're actually redoing our packages and pricing, something I'm working on at this exact moment. But for the most part, it all starts with making sure we simplify their accounting system. Don't use personal accounts for business transactions. Don't use business accounts for personal transactions. And that makes our job very easy. It allows us to help you. Then we can just get read-only access. We pull everything. We can easily do the accounting. Here's your profit and loss and balance sheet every month. And then it's generally best to just go ahead and set up like 3 quarterly meeting, 3 or 4, first quarters, generally nothing's really changed that much. And then we just look at the numbers, we go through it. It's really understanding what they're trying to do. Are they trying to grow? Are they trying to be a multi-million-dollar company? Are they trying to sell it? What are they trying to do? And we work in a system of outsourcing in that we can help people that help with mergers and acquisitions. We have several people that offer financing for, lines of credits, business vehicles, stuff like that, and for tax. So we're looking at how to help them with their quality of life, really. I mean, what do they really want? And then we help them get there. And it starts with good numbers and just talking them through it, and making sure they know, well, do all this, yeah, you're making a lot of money, but you're going to owe $150,000 in taxes. So we need to start paying quarterly or figure out a way to, offset some of that.
Okay. So for small business owners who feel behind on their books, financial accounting books, or in fact, even their taxes, where do you think they should start?
They're going to have to start biting the bullet and knowing that it's going to be painful to get it fixed. And if it's not commingled, I keep saying this over and over because
Yeah, sure.
I cannot stress how that takes something so simple and makes it virtually impossible. If someone comes to us with a year of bank statements and everything, and there's 500 personal transactions, we can do nothing else but get those on one list and send it to you and ask you what they are. But if it's all business, we know that when you go to Costco or Amazon, those are supplies. If you go to the gas station, that's fuel. We don't have to ask you a whole bunch of stuff, but if you're going shopping for your family or for your grandmother, and we don't know that, and then you're not going to remember that. So it becomes like a huge task. But if you stop doing that immediately, stop commingling, there's no reason to do it. And then just give us everything. We're going to give you a list. We'll help you go through the list. If you can't remember all of it, we'll sort it out the best we can. But there is going to be some homework on your part. But the longer it goes, the worse it gets. And if you don't stop the commingling, then it just stays.
So what are some of the most common tax mistakes that you see, and how can people avoid them?
Well, for business owners, filing as a sole proprietor when they should be an S corporation is, I've had people that come to us and they've been paying 15, 20,000 or more in self-employment tax for sometimes 10 or 20 years. And their accountant they just do their taxes, send them their bill and they pay it. No one's ever mentioned that. Entity structure is huge because basically self-employment tax is pretty much FICA and Medicare on the net income of a business. If you file as a sole proprietor, then you're going to pay that. It's a whole additional tax. So entity structure is huge. I think selling stocks, one thing I see an argument I have every year is people with brokerage accounts. They sell stocks. They didn't get the money, so they think they don't owe taxes, but that's not how that works. It's still a realized gain.
Sure.
I would be aware of that and have a conversation with your financial advisor. We're happy to meet with someone and their financial advisor. They usually cuts off the back and forth.
So you work with advisors, wealth advisors and financial advisors.
Yes.
Fantastic.
We have clients that are financial. We actually have several. I have a call today with a financial advisor of ours to discuss this situation. So yes, we have a good understanding of that with retirement. And you got the safe harbor deadline for a 401k, and obviously you can't work around that. Does a SEP work? Does a simple work? Traditional IRA, Roth. So I think the big thing is we don't step on any of their toes, which is why we've managed to get a lot of referrals from those. We don't step on the big picture, but we offer our insight and help them, know the implications of that, Roth conversion stuff.
Okay. Very good. Let's talk about proactive tax planning. How do proactive tax projection and planning change the game for the clients that you serve?
Well, it helps them know their cash situation. And obviously, anybody that grows a business or owns a business, myself included, I'm always worried about how much money I'm going to have at certain times. So even if you know it's coming, even if you can't do anything about it, if you know it's coming, I think it really helps. You can always set up a payment plan, but like I say, you can't go back and change the past. So generally it could be dumping money into a retirement account or something like that. But the only reason you're going to have a huge tax liability is because you've made a net profit generally, or you've sold stocks at a gain or something like that. Maybe it makes sense to sell those at a loss. Tax loss harvesting is a thing where, you can have capital loss carry forwards. But really, there's a lot of ways, and it's just taxpayers are like snowflakes. No two are the same. And every time you go to TikTok and they're like, do this, do that, and you save all this money, but that may not be the case at all. Maybe for one, if that's all you have happening, but there's all kinds of other factors. It makes sense to invest in real estate, or does the 401k make more sense? The pluses and minuses. Is this a good year to put some money in a Roth? Is this a down year for your business? Is this a good year to move money into a Roth and kind of eat the taxes this year? So over time, we've flip-flopped people's situation drastically. I had this one client who's actually like our second monthly client when I first started 5 years ago. And I always call him my perfect client because he actually listened. When he came to us, he owed the IRS well over $100,000.
Mhm.
He was in the middle of a divorce. He didn't own a home. Now he has a home that he's renting out. He's bought another home. He's got hundreds of thousands in retirement.
Mhm.
He's ahead on all of his taxes because he listened to us, because we've helped him time, he purchased a vehicle, maybe he's dumped this much in retirement, put his wife on payroll. He's remarried,
Good.
he put his wife on payroll to dump more into retirement. There's endless possibilities, really, and everybody's different. It starts with their life. What is your life? There's more to it than just numbers.
Let's go to your personal and your leadership style. You're a business owner, a dad of three, and someone who's lived a few creative lives. How do you balance business and family while keeping that creativity spark alive?
That actually took a long time.
Okay.
Well, I turned it off. Obviously, tax season is tax season. I can't do anything
Yeah.
about that.
Right.
But I'm done at 4 o'clock every day. I don't work on the weekends. I would say in the beginning, you got to do what you got to do.
Mhm.
If you want to start a business, you're going to have to make sure it's actually going to make money.
Mhm.
So then, second, you're going to have to grind. I mean, you may have to DoorDash, you're going
Wow.
to have to still feed the family, whatever it takes, you're going to have to do it. And you're going to have to work extra. It's going to be painful. You have to communicate with your family and your wife and be like, this is
Sure.
what's happening. But then you get to a point where you can kind of be more selective about clients. I would say the biggest thing, like I have a life now and I didn't for a long time. Like
Mhm.
4 o'clock today, I'm done. I won't think about this till I wake up tomorrow. And it was not
Mhm.
like that. And you kind of have to take any client in the beginning. We don't do that. If someone comes in and they start explaining their situation and I start thinking, I'm gonna have to do this myself. I'm already getting anxiety about it. I
Mhm.
just tell them we're not a good fit.
I
And
see.
it really is. I mean, I don't know. I would say we do something. I don't know the exact number over the course of a year for 750 to 1,000 different people. We do something. Or set them LLC, file their taxes, something. And
Okay.
it really takes like 4 or 5 people to be bad fits that can make that way harder than it needs to be. 90% of the other ones, they follow your process, bam, bam, bam. You're able to help them. You feel like you're doing a good job. If you can't provide the level of service, you're probably going to need to hire somebody. And one thing I learned the hard way was do not hire someone that does not have experience without a very structured training program, clear job description of what they're going to be doing, and make sure the person who's training them is capable of doing that. Back in 2022,
Mhm.
it took us about 2 years to recover from that mistake. I hired 2 college graduates, and one of them is still with me, and he's great. And the other one didn't work out, and the person that had trained them ultimately did not work out. And if I were to say whose fault it is, it's mine. The finger pointing would go to me. So I think that would be my biggest lesson.
Okay.
And yeah, that would be my advice.
All right. Very good. Greenville has become a hub for small businesses and these communities have come and banked on a lot of entrepreneurship over the last several years. How
Yeah.
has being part of this community influenced your work and perspective?
Well, I'm from here. I'm 48 and a half, and I lived here for all but 6 years. I don't meet people that are from here very often, but I like it. People come here, is bringing a different culture. It's more sophisticated, back in the day. I like the growth, and obviously there's opportunity there. People move here, they think they've got to have a tax person here. A lot of people do. Even
Mhm.
though I'm on a mission to convince everybody here they need a local accountant and everybody else in the country they don't. But
Mhm.
so it's really helpful in that regard. But there is a community. One thing that's surprising when you start a business, and I've had a lot of other people tell me this, is how quickly everyone wants to help everybody. It's not
Oh,
like you go to networking groups and all this stuff. It's not, you're very nervous in the beginning, but you walk in there and it's almost every single person. They're just wanting to learn more about how they can help you. And that's definitely true here in Greenville. And I think it's becoming somewhat of a melting pot, which is a good.
what's your biggest takeaway about what drives long-term business success?
I would say it would be obviously starting out knowing, is the business really profitable, and thinking of all the expenses. Like obviously a roofer may have very high insurance.
Hmm.
A cleaning company may have very high turnover in employees and training them. And I've had several people come to me that are making all this money, but you're really not making any money. I would say that it would start with simplifying everything as much as possible, getting a
Hmm.
realistic goal about your cash and knowing where your cash is going to be and projecting that and not trying to get too crazy. And one thing I've noticed for myself was understanding that forecasting your cash realistically. Within a few months of going out on my own, there were times when I made in a week more than I'd make in 3 or 4 months in my job. But then there would be
Okay.
2 or 3 months where I hardly made anything. So you go from
Mhm.
thinking I'm rich to like, how the heck are we going to eat? And then, so I would say, you're not going to not have, I don't know if I'm saying this right, an emotional attachment to cash.
Sure.
I would say
Sure.
recognizing that you do have an emotional attachment to cash and knowing that this cash might have to last and it can be used. If you don't, I sunk a lot of money into marketing things. I was like, they said my name on the for the minor league baseball game one year. I paid for that. I was in a couple of magazines. One of the magazines I felt worked very well. But I did a lot of, I just kind of like, I got this money, let's dump it into advertising. And maybe that wasn't the best idea at the time. Or
Mhm.
so I guess just really recognizing an emotional attachment to cash and really planning that out, because how much you're making this week may not be what you're making next week. And
Mhm.
that'll even out over time. But in the beginning, you don't want to put yourself in a position where you've got a bunch of debt or, run up a bunch of credit cards. Luckily, we have not done that because
Okay.
we don't have any debt. So that's a good thing. But
Okay.
I would say just don't run up a bunch of debt. And I've seen people overpay for coaching too.
I see.
I had
Okay.
a real good coach that really helped me. But if you're losing money, you need to really think about what you need and what you do not need to be spending money on until you have it.
So, Matt, after years of helping clients find clarity in their finances, what's your biggest takeaway about what drives long-term business success?
I would say in the beginning, it would be starting with a business that you know is going to be profitable and understanding your goals. There's many factors or costs that you may not anticipate, like insurance, roofers, or anybody like that that has high risk. Their insurance may be more. They may think, oh, it's going to cost me this much in materials, this much in labor, and that's how much money I'm going to make. But that may not be the real cost.
Okay.
So I would say start off making sure before you dump all your eggs in that basket that you are venturing into a company that can be profitable.
Okay.
And then after that, I would say recognizing an emotional attachment to cash. Everybody has it. Just because you make a whole bunch of money for a short period of time does not mean that's going to be what's going to happen this whole year or the next year. So make sure you really get a good grasp on where your money is going. You got to advertise. It's
Okay.
not a bad idea to have a coach. Obviously, I had a coach that was very helpful for me, but it may not be the time to dump into all that, and make sure the return on investment is there. And think long term. Some people come out of the gate and maybe they took money out of retirement, or they've got a grant, or someone's given them money, and they've got some time. They got like some runway to work with. But that may not be your case. You really just need to think in terms of cash. Know that just because you have cash now does not mean you'll have cash later. It may need to last. If you can turn that cash into more cash, that's the way to do it. But an example would be back with COVID and all the PPP loans and the EIDL loans. I've seen the aftermath of that years later. These people that they thought, I mean, something like hundreds of thousands of dollars. When you're a business owner and you're just making it every month and you're profiting a little bit, then all of a sudden you got $700,000 in the bank because you got PPP money and the EIDL loan. That EIDL loan's now having to be paid back, and they don't have the money, and they didn't use it properly. So I would say
Wow. Hmm.
just being strategic about how you use your cash or save your cash when you have it. And
Perfect.
really
What's one simple financial action a business owner could take this week that would make their life easier?
stop commingling business and personal transactions.
I think for all the listeners and viewers, if there's nothing to take away, do not commingle personal and your business accounts.
Yeah.
Where can listeners connect with you, learn more about your practice, and check out your podcast and resources?
Just Ledger Medial, Facebook, Instagram, X, wherever at Ledger Medial, ledgermedial.com. We're on LinkedIn. Google it, we'll show up.
And any final words?
No, I appreciate being here. I would say good luck to everyone. It's fulfilling. Being a business owner has its pluses and minuses, but at the end of the day, you're working for yourself, and that's exciting. That's probably the reason you did it to start with. So don't forget about that, and don't let it consume you and make you crazy, because it will.
Fantastic. Well, that concludes today's episode of Jet Setting Wealth Advisory. A big thank you to Mr. Matt Green for sharing his story from his years in music to building a financial practice designed to help business owners thrive. Again, if you want to learn more about Matt or explore the services that is offered by Ledger Medial Accounting Service, please be sure to visit his website or connect with him online. We'll include all the links in the show notes. I'm David Yu, active airline pilot and wealth advisor. Be sure to subscribe to Jet Setting Wealth Advisory for more conversations with top professionals shaping the future of finance. And until next time, keep your goals high, your plan steady, and your financial future on course. See you on our next episode. Thank you and goodbye.
Thank you for flying with us on today's episode of Jet Setting Wealth Advisory. If you enjoyed your journey through the fiscal skies with David T. Yu, don't forget to subscribe to our podcast and keep your financial knowledge soaring. For more insights and personalized advice, visit us at www.dtywealthplanningsolutions.com and connect with David directly